So now we're going to look at the stock market, and I'm going to do this differently than I have ever done, because what I want to show you is the S&P 500 on 4 different charts, so that you can see what we look at and why we have been cautioning that the market was in a lot of trouble. And honestly, I did not know the extent that it would break. You never know when a free fall condition is going to hit and how deep it's going to come. So I'm switching over now to the weekly chart of the S&P 500. I'm going to show you what our members see in the charts that were updated today and what the members did get. Now, first of all, let's just go a little further out in here. I want you to note that there are major cyclical patterns right in here and here. See how the low lines up right in here and then projects to a low here out in June, July. We have been talking about a major top and then a decline. We had said early part of the year that risk was increasing from mid-January into early March. We got fooled by this little rally right in here. This is what our original and what we came back to as the likelihood. Now, there's been a slight shift in here. You'll see the dotted line as these are extending out a little bit. What we're looking for, and I'll show you on the daily chart, is a bottoming occurring right in here. Here's your major 61.8, your cycle low support coming in right across there. And for now, we're going to say that the support right around 2720 is an important one. Now, we're in free fall, and that's only 20 points from where we are right now. And if it broke through there, the next level would be over here at about 25.65. So that's the levels we're looking at. We think it could hold in here, but in this condition of the market, you just don't know. So we're looking at here, can it hold? And if not, then we're looking here at about 25.65, right at this level right over here, the major 71.8. If it broke to there right now, then this low over here that we're projecting in July would likely be down around here, which is 23.67. Coming out to the longer term. So you can see that it's pretty likely that July is going to get there and that we have some additional 400 points on the downside from where we are right now in the S&P 500, which is a pretty good percentage right there. And this all will have been the crash of 2020 that we're in right now. And it looks already like that in just 13 days, doesn't it? So these could definitely be lower than we're projecting right now. The key is what happens at this point. These yellow ovals are these corrective periods. You can see that. And this big one out over here could easily come way down here to this level or worse. Out into July, into the 2300s. So remember that when you get into these final stages right over here, like you did right over here, that's the collapse period right there where you get these major declines. And the one we're in right now is already worse than this because this is the first wave down right over here. And this was the first wave down right over here. It rallied up for about 5 weeks and then put on a big break again. That's like what we're looking at here. And there is a lot of trouble when we look at this market. Best case we make really out into July is falling down to that area, right down over here into that 2500s right over there. And it's heaven forbid that they don't act properly, the Fed, and help the markets to move organically. You could be moving down here as the Fed continues to panic the market and do the wrong thing. So 23.65, let's just say that's what our target is over these coming months. Here is the short-term pattern. Now, these are 20-day cycles. You can see the clarity of the cycles. This is 22 days. This was 20 days. This was 20 days. This was 20 days. So perfect cyclicality. We are now 1, 2, 3, 4, 5, 6 days into this cycle. There are 14 trading sessions, give or take. 2 or 3 either way. It could bottom early, it could bottom later. And here we are at this weekly chart support that I just showed you right in here. And if we break that, then again, I'm going to go back to the weekly that I just showed you. We fall down to these lower support areas right in here. I don't have them on this daily chart. So once we broke down underneath that support level, we had negative configuration going on. Cycle support breakdown negative indicates intermediate top, and you can see what happened. It broke down into the 20th day. It rallied into the sell zone and then collapsed again. This is your new sell zone right over here, and you could get a rebound up to this 2900 area. That's only 160 points. That could be an easy bounce, but if it happened, it's a screaming sell because the probabilities of continuing on the downside are so high. That would be, to me, a best case, a rebound to 2,900. And if we got that here in the next week, then I would say that would be the exit opportunity for the people that have been writing to me and asking, well, what do we do now? I missed the selling. Well, there's probably a lot more selling to come. And rebounds that occur are very likely to be opportunities. So what I just showed you right over here is what our member charts look like. And looking at the S&P 500, the NASDAQ, and the Russell. And when you blow them up, like I'm going to blow this one up right now, where I say maximize sell, you get right back to this chart. So what we're getting right now in here, and I want you to see, is the option bias indicator, one of our proprietary studies. This break right over here gave you a bottom warning. We call that a N1 orange, extreme oversold condition. I want you to note in the selling so far, it has not become extreme yet. It is slightly oversold, which is very interesting because that means there's been internals going on that are keeping it from being extreme oversold right now. You would think it would be. Maybe that will hit again pretty soon. But that's because the volatility numbers are going up so strongly, and when that happens, it changes, the formula automatically changes because higher volatility means it's less oversold. So what it looks like to us right in there is that you get a rebound, it's likely to be fake. You get back to yellow on here in neutral, man, I think that's the best you could possibly see in there. Now the next chart I'm going to show you in here is the slim ribbon, the condition chart, which shows you momentum. And this goes all the way back here, about 6 months in time. This is back to September of last year, right over here. And you could see the upward momentum that we were in through here. We had a little correction, went to neutral, and then turned positive again. When the projection oscillator gets down to oversold conditions, it gives you a long side indication. In other words, momentum is continuing. It's correcting internally positively in a positive way. Once this turns red, then it starts to give you sell signals, and you can see how fantastic this one was. You can see right in there. We also keep the market forecast indicator, which showed it very, very oversold right over there and about to get to that level also. So a slim ribbon giving you a negativity. What often happens is that it becomes support on the way up, it becomes resistance on the way down, and these are your daily chart extreme negative conditions that are existing right now and that likely say that we're going to continue to move to the downside. If this stays red and then this projection oscillator moves back up past the 75 level, that's going to be negative. Now I'm going to show you another version of this chart. So this helped us know that the markets were in a lot of trouble when that happened. And now take a look at this. This is our 2-hour chart right over here. And what I want you to see in here is that we do this for short-term traders. So here the short-term bias turned negative right at this level. And anytime the short-term bias is negative and the projection oscillator gets up to these levels above 75 or so, it is a sell warning that the market will move down again, and you see that happen here. You see that happen right over here. You got neutral here, and then you got another signal, and this is actually quite weak. You can see that. Our askSlim market condition indicator is on here. The key is that it needs to be above the swing zone, which is between 25 and minus 25. When it crosses through it, it says longer term internals are taking over. It gives you negative conditions, and we have been in extreme weakness conditions right in here. We have that in all of the indicators, and you can see we can't really even get a rally that's significant over here in the projection oscillator to give you another sell, but these are all negative confirmations when you get in there. Here, when it was moving up, they were positive confirmations right there. So this is an unbelievable valuable chart, 2-hour chart that keeps you in the direction of the big moves. That's the key to this, and you can see right now it is in negative condition, and very likely that if we get a rebound, this is going to get overbought over here in this area, and it's going to turn down again. And like we showed you on the daily chart, it has another 12 or 14 days to go of these conditions. So this is extremely negative condition that we're looking at, and very likely to continue. Just to review in here, I'm going to go back. Momentum on the daily, extremely negative in there. The cycle pattern on the daily pointing to declines coming for the next 2.5, 3 weeks in there. And here is your pattern in here that is pointing to a bottom likely coming in this market in the next couple of weeks, aligning with that daily pattern, and then a rebound period that should last a number of weeks before the next free fall comes in.